Good morning, I'm Maiki Oreta, and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines: the World Bank approves a new $750 million loan to support the Philippines' push for digital transformation. President Bongbong Marcos' economic czar admits that the tax incentives under the new Create More law remain inferior to those offered by other Southeast Asian nations. Fintech giant GCash clarifies that the recent unauthorized transactions on its platform were not the result of a security breach or phishing attack. Rather, they were linked to a product issue with their Send Ang Pao service. And holding company Anscor, controlled by billionaire Andy Soriano, acquires a minority stake in the Bistro Group. First, a look at the financial markets. On Wall Street, the Dow Jones and the S&P 500 rise slightly after October data showed consumer prices rising in line with expectations. The CPI increased 0.2% for the fourth straight month, adding support to bets that the U.S. Federal Reserve will cut interest rates in December.
This little uneasy feeling, even though stocks are up, even though the major averages are up, I think there's still that little bit of uneasiness that, hey, look, inflation is here to stay with us. And some of these policies that may be coming from the Trump administration could even be a little more inflationary. So I think that 10-year number is really the one that we're watching here. 4.5%, we start to get a little nervous. If it creeps back up close to 5, that's really where we don't want it to be. So that's the number we're going to keep an eye on.
Over in Europe, markets closed lower as traders digest the latest U.S. inflation data. London's FTSE 100 was unchanged, while the DAX fell nearly 0.2%, and the CAC 40 lower by 0.1%. Here in Asia, in the Asia-Pacific, markets are trading mixed, with investors also assessing America's inflation data. Japan's Nikkei 225 and Australia's S&P ASX 200 are both up in early trade, while South Korea's Kospi is down sharply early into the session, and it's lower by nearly 3%. The World Bank has approved a $750 million loan to help the Philippines accelerate its digital transformation. This loan aims to lower barriers to investment, particularly in the broadband sector, and promote financial inclusion through secure digital services and an enhanced payments infrastructure. This funding opens up new opportunities by making digital services more accessible and boosting growth in online transactions. One of the key objectives here is to increase fixed broadband connectivity to 35% of households by 2026, up from 25% in 2023. This follows a $600 million loan approved by the World Bank in September of 2023, underscoring its ongoing commitment to supporting the country's digital infrastructure. On another front, President Bongbong Marcos' economic czar, Secretary Frederick Go, acknowledges that the tax incentives under the newly signed Create More law are still not as attractive as those offered by other Asian nations. However, he stresses that investors still have other options to consider. The Create More law reduces the corporate income tax rate from 25% to 20%, a move intended to make the Philippines a more competitive investment hub in the region.
Pwede po sila mag-avail ng 5% gross income earned na tinatawag. Ito po ay ang paborito po nila. Ito po yung binibigay ng Clark Development Corporation. Ito po yung binibigay ng PEZA, ng Philippine Economic Zone Authority. Ito po yung paborito nila. Kaya po yung mga malalaking semiconductor companies, for example, like Texas Instruments, Analog Devices, yung gustong-gusto nila maging PEZA registered. Iba-iba po yung incentives na binibigay ng mga kapitbahay po natin. Ang isa po kasing pinakamalaking binibigay ng mga kapitbahay po natin ay yung energy subsidy. Kumbaga, mura ang kuryente po.
Correct.
Tayo kasi po, we are the second most expensive country in Asia when it comes to power. So, kailangan po natin bumawi sa ibang bagay.
Secretary Go also highlights the importance of the Create More law on the agenda of the Board of Investments, emphasizing its potential to drive economic growth and attract new investors.
Ang problema kasi po natin nung pinasa yung Create law dati, maraming foreign direct investors ay nadismaya at hindi nagtodo invest sa Pilipinas. Kaya po may konting lag tayo. But, we have to do the right thing. We have to lay this groundwork to promote the Philippines again as an attractive investment destination dito sa Asia. Kasi po, kung titingnan mo in the last, sabihin na natin 5 years, karamihan ng investment ay pumunta na sa ating mga kapitbahay
Neighboring
sa Southeast
countries.
Asia.
Opo.
Yes. So we really want to bring them back here, to bring back the jobs to the Philippines.
The Create More law, while still behind other countries in terms of tax incentives, represents a strategic move to make the Philippines more attractive for business. By lowering corporate taxes and simplifying incentive structures, it's expected to encourage more local and foreign investors to enter the market. Fintech giant GCash stresses that the recent unauthorized transactions on their app were neither an incident of breach nor phishing. GCash Vice President for Corporate Communications, Hilda Makilan, tells BNC's Agenda what happened was a product issue and an isolated case. Makilan says it involved their Send Ang Pao service.
Nakita po namin na meron pong sudden spike po doon sa tinatawag namin transaction ng Send Ang Pao. So ang Send Ang Pao po, ito ay isang produkto ng GCash na pwede kang magbigay na aguinaldo na several yung transaction, no? Ang proseso nito, pag nag-send ang pao ka, yung ang pao ay papasok sa temporary wallet. Nakita namin na yung temporary wallet ay dumadami ang laman. Ito ay hindi regular. Ito ay unusual. Kaya sinwitch off po namin ito kaagad. Tamang-tama, November 9, tumawag po ang ating mga customer at nag-complain bakit daw sila namigay ng aguinaldo. Hindi pa naman po Pasko. So natugma namin na yung aming na-observe at ito pong sumbong na ating mga customer ay meron pong kinalaman. So kami ay nag-imbestiga.
Makilan says they welcome all probes into the incident. As to whether it could happen again, here's what she had to say.
Maraming challenges ang e-wallet, no? So handa kami, no? At kaya namin makipagsabayan. We continue to invest po sa technology at sa tao. Nakikita nyo naman 24/7 weekend nagtrabaho po tayo dyan. Nakikipag-ugnayan din po kami dito po sa ating mga regulators at mga partners kasi kailangan po tulong-tulong tayo to address issue po ng fraud at saka cybercrime.
On to some earnings reports, starting with the country's largest conglomerate, which is on a solid growth trajectory. As of end September, SM Investments Corporation, the holding firm of the C family, saw its total assets expand by 4% to 1.7 trillion pesos. The company reported a 9% increase in net income for the period, driven by strong performance across its core businesses. Banking was the largest contributor, accounting for 50%, followed by property, retail, and portfolio investments. SM Investments' strong performance highlights the resilience of the Philippine business sector. Growth in banking, property, and retail shows that diversified conglomerates are well placed to drive economic expansion. For businesses, it sends a clear message that diversifying investments can provide stability and growth even in a challenging economic environment. Ayala Corporation also sustaining its upward momentum. Its core net income rose 19% to 36.7 billion pesos in the first 9 months, mainly driven by record earnings from Bank of the Philippine Islands, or BPI. The bank posted a 24% increase in net income due to its continued expansion in loans, fee income, and in net interest margins. Higher contributions from Ayala Land, Globe, and AC Energy and Infrastructure also contributed to the conglomerate's growth. With one-off items included, Ayala's net income rose 5% to 34 billion pesos. On the other hand, the gaming arm of billionaire Enrique Razon sees a 58% drop in its net income. Bloomberry's profits fell to 3.5 billion pesos, dragged down by costly expansions at the new Soler Resort North and weaker performance in its entertainment city. Although consolidated gross gaming revenues rose by 2% to 45.5 billion pesos, their overall bottom line suffered. In the third quarter, Bloomberry posted a 470 million peso net loss, which is a sharp contrast to the nearly 2 billion peso profit it reported last year. Despite this, gross gaming revenue surged 22% to 16.3 billion pesos, showing strong demand in the gaming sector. This outlook shows a mixed bag for Bloomberry and the gaming industry as a whole. While gaming revenues continue to grow, the cost of expansion and struggles with existing operations remains a significant challenge. Investors will be looking closely at how the company navigates these headwinds. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Philippine shares opened back in the red. The benchmark PSE index continues to extend its losses, falling for a seventh session in a row just early into trading. PSE index was lower by 1.4% yesterday to 67.14. Right now, we're probably trading at a new three-month low for the index. The last time we were at this level was at 60. We were at 66.93 last August 15th. Right now, the benchmark PSE index is down by over 0.75% to 66.65. All shares index down as well, down by 0.5%. All the sub-indices, except for the financials, are in the red, with the holding firms counter down the most, down by 1.5%, down sharply. The financials, though, bucking that downtrend, slightly up by just 0.2%. Now, analysts say investors' enthusiasm has dampened globally as investors worry that Trump's policies might exacerbate inflation. Now, looking ahead to today's session, analysts they anticipate a cautious market sentiment. Investors are expected to closely monitor upcoming economic data releases and global market trends for more trading cues. Now, at the foreign exchange market, the peso opened slightly weaker against the U.S. dollar. It opened at 58.80 compared to its previous close of 58.74. In other news, a Soriana Corporation, or Anscor, controlled by billionaire Andy Soriano, acquires a minority stake in the Bistro Group for $1.6 billion. Anscor confirmed it signed a sale agreement with Singapore-based Navigar Enterprise, which had been looking to exit the Bistro Group, but had struggled to find buyers, mainly due to the high price and the foreign-denominated portfolio of brands. Founded in 1981, the Bistro Group is now one of the country's largest restaurant operators, with more than 200 locations across 23 well-known brands, including Italiani's, TGI Fridays, and Texas Roadhouse. This deal marks a significant move for Anscor as it diversifies its portfolio. For the Bistro Group, the sale provides a much-needed infusion of capital and may signal a turning point in restructuring, given the challenges in its high-end mixed brands. Now, for both companies, this could open new opportunities for growth, particularly in the local hospitality sector, as well as enhance Anscor's presence in a dynamic and ever-expanding industry. Philippine Airlines, led by Lucio Tan, marks its 11th straight profitable quarter. Its Q3 profit, however, took a significant hit, dropping 87% to $13 million from the $98 million reported last year. The flag carrier's 9-month earnings were down 61% at $135 million. Rising costs impacted PAO's operations, largely attributed to higher expenses in aircraft ownership, maintenance, and airport handling fees. Now, Cebu Pacific reports an 11% increase in revenues for the first 9 months ending in September. The growth was driven by a 13% increase in passengers, totaling 17.5 million. For the third quarter, revenues fell 8% to 23.1 billion pesos due to seasonality shifts from the earlier start of the K-12 academic year. The profit of the Gokongwei-led conglomerate JG Summit Holdings improves in the first 9 months of the year. Net income rose 16%, driven by strong revenue growth and the positive impact of its bank merger with BPI. Revenues increased 10% to 277 billion pesos, supported by robust demand in travel, food and beverage, and in petrochemicals. However, in the third quarter, net income dropped 39% to 3.1 billion pesos. Consolidated revenues held steady at 89.1 billion pesos. Overseas, Chinese social media and gaming company Tencent reports better than expected profit in the third quarter. Profits surged by 47% year-on-year to 53 billion yuan, or $7.4 billion. Analysts had expected an income of 46 billion yuan. Revenues, meanwhile, rose by an annual 8% to 167.2 billion yuan, or $23 billion. Gaming reportedly remains to be the company's backbone, with the unit's domestic revenue up 14%, while that for international games increased by 11%. Okay, we'll be back after this short break. Let's take another look at the benchmark PSE index. The market continues to extend its declines after falling for its sixth straight session yesterday. The PSE index is now down by 0.7% to 66.65. I'm pretty sure this is a 3-month low for the main gauge. The last time it was at 66.93 was last August 15th, and that was a 3-month low. So right now we're even lower than that. The broader all shares index mirroring the losses in the main gauge. It's down by 0.5% to 37.73. Out of all the sub-indices, it's only the financials that is trading with a slight upward bias, up by 0.2%. All the other subsectors are currently in the red, with holding firm counter down the most, down by 1.5%. Now, the Japanese owner of the 7-Eleven chain is said to be considering going private amid a takeover bid of Canadian rival Couche-Tard. Reports say 7 & I Holdings is eyeing to buy back its own shares, which would allow the retailer to continue under its current management and remove the pressure from shareholders to sell off more of its assets. According to Bloomberg, the company has started looking for banks to fund the management buyout worth up to 9 trillion yen, or $58 billion. 7 & I initially rejected Couche-Tard's takeover bid, but the Canadian firm reportedly hiked its offer last month by 22% to about $47 billion. On another front, scientists are once again sounding the alarm on global warming. The annual Global Carbon Budget Report warns that carbon emissions worldwide are on track to hit a record high of 41.6 billion metric tons this year, up from 40.6 billion tons in 2023. The majority of these emissions are from the burning of coal, oil, and gas, with the rest coming from land use activities such as deforestation and forest fires. The report issues a stark warning that without immediate and significant emissions cuts, the world will reach the critical threshold of a 1.5 degrees Celsius temperature rise. Under the 2015 Paris Agreement, countries committed to limiting global temperatures to no more than 1.5 degrees Celsius above pre-industrial levels to avoid the most devastating impacts of climate change. However, fossil fuel emissions have instead increased over the past decade. This underlines the urgency for countries and industries to accelerate efforts to curb carbon emissions, as the failure to act now could pave the way for even more devastating climate impacts in the years ahead. Now, as climate warnings intensify, a Berlin-based startup is making significant strides towards the industrial-grade application of carbon capture technology. NeoCarbon is currently testing its latest NeoDuo module in partnership with a Japanese company specializing in cooling water treatment. The module captures pure CO2 using excess heat generated during industrial processes. What makes the NeoDuo so promising is its compact size. It's much smaller than a standard freight container, yet it's capable of reducing carbon emissions on par with a forest of about 500 trees.
When we turn the fan on, you can see here in the box, like that basically sucks in air that comes in from here. So ambient air here is at 400 ppm. So 0.04%. It sucks in here, goes through the reactor. This is where all our novel technology and patent reactor is. Then it goes out here, and there's no CO2 anymore because all the CO2 got trapped in here. And what happened then, that's why we have 2 reactors. We basically switch it off, so it stops sucking air in, the air goes through the other one, and this one we start heating up. So we can take all the waste heat from the customer to release the CO2 100% pure, and then we can store it in bottles and use it for different things. Whereas trees, after 100 years, they burn or they rot, and then your CO2 is back in the atmosphere. So this is more durable, more measurable, and indeed much more compact as well.
This innovation could be a game changer for industrial companies looking to meet stricter environmental regulations and reduce their carbon footprint. As the need for sustainable technologies grows, developments like neocarbons could play a crucial role in global efforts to combat climate change. And before we go, Filipino craftsmanship takes center stage at Miss Universe 2024. For the first time in the pageant's history, the winner will be crowned with a masterpiece designed and crafted by Filipino artisans. International jewelry brand Julmer unveiled the crown, describing it as a symbol of man in harmony with nature. The brand, known worldwide for its South Sea pearls, highlights the efforts of pearl farmers and Filipino artisans in bringing the design to life. Founded in 1979 by French pearl farmer Jacques Ranelec and Filipino entrepreneur Manuel Coanco, Julmer has long been synonymous with elegance and sustainability. Now their craftsmanship will shine on the global stage, bringing both glamour and pride to the Philippines. Miss Universe 2024 will be held this Sunday in Mexico City. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.